All right. Right now is the time to take hold of your financial future and start educating yourself. Good afternoon, everybody, and welcome to another edition of How to Invest in a New America. How's everybody doing? Happy Friday. I'm your host, Joe Gilbert. I'm an institutional equity strategist with Newport Coast Securities in Irvine, California. And every day I discuss high performance techniques and strategies my listeners can use to put the odds in their favor when they get onto the battlefield of the stock market. All right, now today, I've got a great show lined up. I've got a client on the line named Jeff Levy, and I want to welcome Jeff to the show. We're going to talk to him about his past successes and how he dealt with me. Jeff, how you doing?
I'm doing great today, Joe. How are you?
Awesome. I really appreciate you taking your time out of your busy day. I know you're swamped, but I just wanted to talk to you. You used to be a client of mine, and you've had enormous success with CANSLIM, and I want all the listeners to know that, when they first started out, if they don't have any experience, tell me about how long you've been investing.
Well, I started investing in the early 90s and explored a number of different systems, and it really wasn't until probably the end of 94 or so I found Bill O'Neill's book, How to Make Money in Stocks. And then, you and I met in 1995 on one of those sort of old-style internet chat rooms.
Tell us about that. How did you meet me?
Well, I was reading the book and was trying to understand. I started getting the paper, and I was trying to understand more about the patterns and the technical aspects of it. I understood O'Neill's fundamental screen, but I was having a bit of trouble understanding the patterns and reading the patterns on the weekly charts that he shows in the paper. So I found, a chat board where people would post questions and some people would answer them regarding CANSLIM. And I noticed there was this guy that seemed to know what he was talking about. He was answering people's questions, and that guy was you. So we started corresponding a bit, and you said to me, I asked about some patterns, and you said, do you subscribe to daily graphs? And I said, no, what's that? And
all right, just so all the listeners know, Daily Graphs is the weekly edition of the chart books that are now called Market Smith books, but back in the 90s, they were sent out on Sundays, and there were chart books of several thousand stocks. Okay, go ahead, Jeff. I didn't mean to interrupt you on that.
So I don't know if you recall, but you said you get these chart books, and you get them on Sunday, and you have to go through all of them, and there's hundreds of pages and a couple thousands of charts, and you have to really look at them and study them. And then you said, or, you could, I do that every week, and you could sort of see my recommended list, and you can go that way. And I'm more of a do-it-yourself kind of guy. So the way we started out is I opened up an account with you. I started getting the chart books, and I looked at your ideas. And I think, you and I kind of hit it off just on a friendly basis. And
now, Jeffrey, just so the listeners can know, okay, because giant acorn or little acorns can grow into giant oaks. I say that on the radio all the time, but you started an account with me, and how much did you start with?
I started, probably the first amount I put in was 40, and then over the next month or two, I put in another 10. So I basically started with 50.
Okay, I thought it was the other way around, Jeffrey. I thought we started with 10, and then
You know what? You may be right about that.
Yeah, I don't think you started with 40. You started with 10, and then after about a month or two, after we started having a little bit of success, you added a little bit more.
I think, I think you're probably right about that. It's a long time ago.
Yeah.
But yeah. And, the thing that was great about what you and I did is we would chat on Sunday nights, and you would ask me, well, what charts did you like? What did you see? What do you think? And you taught me a lot of the details. And what was great about it, and the thing for me is, there's an old saying, it's better to, what's better to do, give someone a fish or teach someone to fish?
Right.
And I think that's basically what you did for me, which is why I don't use brokers anymore, and haven't for a long time, except for executing orders, because I learned the system in the main with your help, and then I went to some of the O'Neill seminars.
Now, Jeffrey, let me ask you a question, okay? When we first met, all right, you were really new to it. You had just picked up the book, and really, the learning curve was quick with you. You're a real intelligent guy. But I need to ask you, okay, in the beginning, was I hard? Was it hard for you to access me, or I mean, was I there when you needed me, and were you able to call me at any time, or how do we work with that?
Yeah, you were. Well, I found you extremely accessible, and it wasn't just the accessibility; it was your willingness to go through details over the phone. Back then, I don't even think they had daily graphs online.
They
When we
didn't.
first started talking. So you and I would basically be looking at the same chart together, and you would point out little details like, look at the support it got on this day, look at a relative strength line. And what was great for me was that all these little details that you had been teaching to me, it all came together after I took my first O'Neill seminar. I think you and I had been working together for maybe 6 or 8 months, and then I took my first O'Neill seminar. And I think for other people, if you just go to one of those seminars, they throw a lot out at you, or they did certainly back then. But it was, almost all of it made sense to me because of what we had spent time going through in terms of studying and details.
So is it fair to say that I helped accelerate your learning curve?
Yes, Joe, that would definitely be fair to say.
Well, I'm just
Yeah,
trying to give the listeners, remember, this show's new here in Orange County and in Inland Empire in San Diego, and I'm the new kid on the block. I do have 27 years experience, but the people don't know that. And, a lot of times I'm getting a lot of calls from people who have very little experience. And I just want them to know that, I'm there and I'm accessible, and I'm good at teaching. And, so
yeah, I think that's right. I think that the key for your listeners who are trying to learn the system, there's a couple of things I would say. Number one is it definitely takes time to learn it. I had success relatively quickly with it, but one of the things I remember you telling me was that at some point everyone goes through periods where they're not doing that well, and every single trader I know and every single CANSLIM trader I know, you go through those. And so that's just part of the advice you gave. And as usual, the key, as you always have taught, is to when you have losing trades, it's to lose a small amount.
Right.
And that's kind of rule number one: cut your losses early.
Jeffrey, I had Jim Ropel on the show last week or this week, and he was talking about his learning curve, and he talked about how he had tons of losses, in the first few years while he was learning. And I did too. I mean, how do you learn to be good at something other than to make mistakes? And, if a man never made a mistake, he'd own the whole world in a month. But if he didn't learn from his mistakes, he probably wouldn't own a blessed thing,
Well, let me add something to that. And this goes for all trading, using any kind of system. Most of your trades, especially in the beginning, but most of them will be losing trades, especially in the beginning. But the amazing thing is, if you keep the losses small, you realize, and let your winners run, you realize that's all you need to do. That's the key. You manage the money appropriately. Don't, overdo any one single position, and keep your losses small. The winners pay for the losses by far. And, one of the things that you and O'Neill suggest is at the end of the year, you look at all of your trades. And those first couple years, I realized that if I had maybe trimmed, let's say a 10% loss to a 5% loss, or one year I remember violating the rule, not cutting it at 8%. If I had just cut that loss, I think it went down to maybe 15 or 20%. If I'd cut it sooner, it would have made a big difference in my year. So that's
Now,
one of
now, Jeff,
the
I want to be
tools.
clear to all my listeners. All right. If you're dealing with me, don't expect to have tons of losses in the beginning. I mean, I've been doing this 27 years. You know, it's not saying I'm not going to lose money on trades, but, you know, if you're doing this by yourself without any help, you know, it's likely that you are going to have lots of different mistakes. But when you're working with somebody with experience, I would say, you know, in the beginning when we started out, now let's just let the audience know. I mean, you have documented performance from the time we started until 2000, and I believe we started in '96 during the summertime, if I'm not mistaken.
It was actually 95. But let me just be clear. I didn't have losses in dollars. I had losing trades. In other words, it's like a baseball hitter. You know, baseball hitters get up, and if they hit 3 out of 10, they're in the Hall of Fame. So if I had a losing trade, I lost a tiny bit of money.
Right.
And then the winning ones make a lot of money, and so overall you do well. So there were no. We started in '95.
With how much?
And
Well, let's just say
we started with 50,000.
Okay, right. We
And
put
I
10,
think,
then you added 40, and we took that 50,000. How'd you do?
well, from '95 through 2000, which is when I closed the account and started my own fund, it went from 50,000 to 1.8 million dollars, and that was with including me taking some money out to pay tax.
Now, listeners, think about that. That is what I'm talking about when I say little acorns can grow into giant oaks. Now, it's a lot of hard work, and Jeff put in a ton of time and effort to study. He went to O'Neill seminars. He spent his times on the weekends looking at charts with me, but he had enormous success. Now, at 50 grand to $1.8 million, what does that equate to annually going back 95 to 2000? What was your average return?
Well, what I had a professional accounting firm here in New York City do an analysis of my return, and they represented some hedge funds. My compounded return over that 5-year period was 7,600%.
7,600% over 5 years. And that basically equated to what, 117% per year or what?
Well, it was, I think the average is about 150% a year. Now, remember, that was, you know, the last part of it was late 90s. 99 was my best year. I was about 360%.
360% in 1999.
Right. Now, 99 was a crazy, amazing year. But also, what's important is that 99, you know, there was tremendous momentum through 99. Early 2000, the market topped. And the market topped, I think it was the NASDAQ topped, I believe it was March 5th. I think by March 10th, I was 100% cash. And it wasn't because I knew the market was going to crash and the NASDAQ bubble was going to burst. But it was because I was just following the rules. There was a lot of distribution days in the general indexes, and a lot of stocks were having what's called climax runs. I assume you
Now, Jeffrey, let me just ask you, okay, when you went into cash in 2000, did it have any influence on that? I'm just trying to give the listeners an idea of you know, because I went to cash as well. And from November 99 till March 2000, I averaged, well, I had a 300% gain in Broadcom, you know? And I think...
Yeah, that, I mean, your influence on me is now perpetual because you were my original and most important mentor. So we were, at that point in time, we were talking all the time, you know, looking at the distribution days. I remember chatting about how we were seeing so many climax runs, and you know, you were good about.
So you came out in March, and what was your gain for the year in 2000 coming out of the market in March?
I made 100% just in those 3 months, in January, February, March. So
right, me
I did
too.
extremely well in March.
Now, a lot of the listeners, I got to tell you, I'm sure you know, a lot of my listeners probably got annihilated in 2000 because they don't look at charts, and they were listening and listening to somebody else who probably wasn't looking at charts, and you know, a lot of people got hurt back then. But if you were using CANSLIM, this system pulled you out of the market. You could just clearly see the tops that were forming everywhere. It wasn't just me. You saw it. I know Jimmy saw it. A lot of people we know that use CANSLIM did not get hurt at all, right?
That's right.
Now, how about 2008, Jeffrey? What was your experience in that? Did you get hurt in that year?
No, I had a good year in 2007. Actually, CANSLIM worked very well in 2007, and it was the market was showing topping signs towards the end of 2007, bleeding into 2008.
So you were in cash.
I was in cash to 2000, almost all of 2008, and I didn't get back in until 2009.
Right. So, same here. I got out in 2007, November, pretty much. I didn't have a large book at that time. This was after I had my heart attack in 2005. But the clients that I did have were out of the market and protected. And this system is great for that because, if things aren't working and you're making mistakes, a lot of times it's not because of anything that you're doing wrong, because, you buy things a lot of the times the same way, but when it stops working after a few times, you start figuring out, well, maybe something's gone wrong with the market. And, the distribution days always show up when you learn to react to them. It can save you, right?
Yes. I have been using CANSLIM since '95. It's now, what is it now? 17 years, 18 years. I have never been hurt, in a correction, and I've never missed a move. Meaning, not that I didn't have a draw. There were years where I might be up a lot and I gave a little bit back or some reasonable amount back off of, when things started correcting. But I've never been hurt. I've preserved gains. And, fortunately, I'm a patient person, so I'm willing to wait for the market to bottom again. And
Right.
I have to attribute that to the whole O'Neill system.
Jeffrey, I remember in the 90s when we were together, I mean, we were out before all the corrections and typically coming back in on the follow-through days, buying what I used to like to call, I know you make fun of me all the time, but the one, you know what I mean? And I would imagine I talked to you most recently and you told me something, this one's the one. And I know you got into it and I believe, I don't know if you're still in it, but I know you made a big gain on it this year. Which one did you think was the one?
The one for me this year was LinkedIn.
LinkedIn. And so you got into that and made a big gain for yourself, huh?
Yeah, if your listeners want to look at a chart, there's a period of time, a number of months ago, it came through a pivot point around 116 or 117, and that's where I was in.
Oh, you were Johnny on the spot.
Yep, and I had a modest position going into earnings, and then it had that big gap up after earnings, and I added, and I sold it a few weeks back. And so, these last few weeks I've been out of it. I know it's down today, but even though it's down today, it's still, it's about 180 or so.
So it's safe to say that this year so far, you're up on the year and you're up, I would say, pretty good above what most average people are. No?
I would think so. I mean, I'm definitely up on the year, and as far as me being up, more than the average person, that's probably true.
Yeah, well, you're not the average investor, Jeffrey. I know you spend a lot of time at it, and you're very intensely passionate about it. I know you have your law practice, but I know your real love is this. Am I right?
Yes, I enjoy what I do, practicing law. But when you can get good at a system like this, I think there's nothing better, because your money is working for you. Mm-hmm. And it's really just you and the market, and all of your decisions and the results of your decisions are very, very clear. You're not dealing with a boss. You're not dealing with someone who's being subjective, who's telling you you're wrong when you think you're right. You're much more in control. And for me, if it's not for CANSLIM and studying, I'd be in a much, much different financial position.
So you'd say that reading O'Neill's book and using this system has changed your life in a major positive way financially, yes?
Absolutely.
And now I want to ask you, okay, because a lot of my listeners probably have never even heard of the book. Maybe they have it sitting on the shelf. I've been getting a lot of calls from people that say, "Yeah, I have the book. It's sitting there, but I haven't read it." Would you recommend if someone has zero experience at this? Do you think getting that book is worthwhile?
Yes, I think getting that book, it's a great introduction to the system. Uh, and then there's another really good book that he followed up with, which is a little more detailed. It's shorter, but it's called 24. I think it's called 24 Lessons to Investment Success. That's a great one too.
Oh, you like
And
that
then
one too, huh?
yeah, and the main thing is really just, you know, learning and watching. The market goes through various cycles. You start learning what the charts look like through the various cycles, and you start realizing that when Wall Street says, you can't do market timing, the only reason they say that is because they just want your money and to hang on to it as long as they can, because that's how they generate fees. If you can learn this system, it's the greatest gift you can give yourself.
Right. And I'm doing free seminars every Saturday morning in my office. It's not like, the full days that we went to, but it's free and it's for about 2 or 3 hours. We're going to go through a lot of how to read bases and how to analyze the general market. And, knowing this information, friends, can literally save you if you get through a period like we went through in the last 13 years. It can help you to recognize when a market it's topping out and also when it's bottoming. Now, right now the market's doing really, really good, and but it's still very tricky. And how are you handling it right now?
I have recently, I have viewed this year, yes, as a tricky year for people investing in growth stocks. So I've sort of used this year to kind of hit maybe some singles and doubles, and when I had a decent profit, I was taking it. I've not been going for big, huge home runs this year. I had a nice position in LinkedIn, and that's really given me a nice cushion this year. But I think the market is in a really good uptrend. I think more stocks will be under the CANSLIM system will present themselves.
What I've been telling my listeners, especially when you're just first starting out, the best rule you can have is if you buy something exactly right and it runs up 20%, 25%, take the profit every time until you can learn how to make it work. And conversely, you're taking the losses at 7 or 8%, and that way you could be wrong 3 times and right only once and not really get hurt while you're learning, So when you say you've been hitting singles,
and that was my point, Joe, in the beginning. It's not only not get hurt while you're learning, but you could actually be wrong 3 times and right once and make money and make decent money.
Right.
That was my point about how it was in the beginning for me.
Right. Well, if you're just tuning in, you're listening to How to Invest in a New America. I'm Joe Gilbert. I'm an institutional equity strategist at Newport Coast Securities in Irvine, California. Now, I'm talking to Jeff Levy. Jeff's an attorney in New York City. He also owns his own firm and has offices in Los Angeles. He was my client in the 90s. Now, Jeff, let's just talk about this again. You started with you started with 10, put 40 more in 95, and in 5 years, you turned that 50 grand into, what was it you said, 1.8 million?
Yes.
That is amazing. Really, you're an amazing guy, Jeffrey. No doubt about it. You've done very well with the system. Now, can I just ask you a question? Because, I recommend my listeners get the newspaper, get the book. If they get a chance, go to these O'Neill seminars. How many of them did you attend?
I probably attended about 10 of them over the years.
10. You went 10 different times. Now,
Yeah.
Do you think you learned something new every single time?
Yeah, I think that as you go more and more, you realize, some of it's repetitive, but repetition is good. But as you get a little bit more well-versed in the system, I remember there was one or two seminars. I picked up one new thing. Bill and his team were analyzing. They came up with a new base. I remember.
This is a great story, by the way, listeners. So listen up.
Yeah, it was called. They said, we kind of realized that. I remember Bill up there with his, point showing chart. We realized there's something called an ascending basis. The basis sort of looks like it's sort of basing while it's on its way up. It's a different kind of corrective pattern.
Now, let me interrupt
And
you, okay? Because an ascending base is about at least 5 weeks long, and it has 3 peak points within the base where each one's a little bit higher. And the third peak point is your buy point on that. I'm going to go through that in the seminar as well. But Jeffrey, you learned about this in a seminar, and I wasn't there. It was in New York City. I missed that one, and you went to it. Now keep going. I didn't mean to interrupt you.
yeah, there was an ascending base, and there was a stock, maybe a few weeks or a month or two afterwards, that was in one of those bases. It was called Brocade, and I remember seeing it, and the market was really in gear. And I have been very good with when the market's in gear, and I've got a cushion and a profit. I can be pretty aggressive. When it's not in gear, I go very light with my trading. And I remember calling you up and placing probably the biggest order of my life.
It was
in that stock and that pattern, and I did extremely well with that. One.
Is it fair to say you made your seminar fee back about 50 times over?
I probably made the seminar fee back the next day in the first hour. But the seminars are definitely, for anybody who's studying this system, the seminars are really wonderful. I would say put in the time, read the book, look at the paper, read the articles in the paper, and then go to one of those seminars. And I think it helps everything kind of gel and puts it all together.
Now, listeners, I'm going to be doing free seminars every Saturday morning in my office. We're going to go over a lot of this kind of material. Granted, it's nowhere near what you're going to pay to go to see an Investor's Business Daily Seminar. Those are great, but you could pay up to $10,000 for one of those. What I'm doing is nowhere near that, but it's free. And I have 27 years of battlefield experience in using this system. Now, Jeff met me, and he had very little experience with CANSLIM, and I was instrumental in helping him learn, and he had extraordinary results. It is possible, okay? So if you're new to this, don't think that you can't learn it. All right? You can do it. You can make big money in the market if you're disciplined and you stick to a system. But you got to have rules. You got to have buy rules. You got to have sell rules. And you got to have general market rules. And it's so important that you learn what the sound principles of this CANSLIM method are. Okay? And Jeff, I really appreciate you joining me. So let's talk a little bit more. I don't want to let you go yet. I'm having a blast with you. I love you, man. You know that.
I love you too, Joe.
I really appreciate that.
I have a few more minutes. I'm happy to chat.
So, right now, it looks like the market's breaking into all-time new highs. Things are starting to work out. It's an interesting market. What do you think of that 3D systems?
Well, 3D, that was one of those leaders that I had not been in, but I like, I've looked at it. I've read about the company in IBD, and if you look at it now, it looks like it's carving out the right side of a really nice base.
Right.
It's one of those leaders. It had it. One of the first things you look for is a prior uptrend, and it started, last fall, end of September, and ran up to, looks like, through the end of January. Now it's got a nice long base, and so now I'm, it's on my screen actually. I'm looking at it every day, and so I'm looking at it for maybe to form out a handle here. It's sort of risen up above the midpoint of the correction. So this is where it may rise up a little bit more. This is where you're looking for it to form some kind of handle.
Right. Now this had a buy point on in my view. I know it was a lot lower, but I told my listeners about this last week in the 35s, and we're pushing 41 now.
You definitely could have bought it there. It was in a little consolidation, hanging around its 50-day. That would be a good place to buy it, sort of a safe place to buy it. And but I wasn't really paying as much attention to it there. I'm looking at it now and hoping it forms out and gives me another buy opportunity.
I'm guessing you weren't paying too much attention to it because LinkedIn had your full attention as it was flying from 120 to 180 or 90 bucks.
Yeah, well, that's That's part of it. Yeah. LinkedIn and actually Michael Kors have been good for me. Now, Kors has been a little tough one to handle because it's had some volatility, but I would say in the last 6 months, that's been a good one for me as well.
Yeah, me too. I've done really well in Coors, but I mean, these insiders, every time the stock gets going, they just bury us. It's killing me. I just wish that every time they would have said they were going to do a secondary, they would have said a split. I bet the stock would be triple what it is if they'd have done 4 splits in the last year. You know what I mean?
That's probably right. And hey, if you look at, here's a CANSLIM one that I wish I had paid a little more attention to. That has been amazing. Has been Regeneron.
Right.
Yeah.
My buddy Robert has got a big position in that. He's up about 35, 40 points. He keeps beating me up every day about it.
Yeah, well, especially given what it's done the last 3 days. But that's a CANSLIM stock. That's a good one.
Yeah, these biotechs, it's interesting this time around. And, when we were doing this in the 90s, the biotechs never really had earnings. But now you got a lot of companies in the field that actually are showing earnings. So that's a good thing. But I still think Michael Kors has, a lot of growth in front of it in the longer run. And it looks like it come through a little 57.5 buy point this morning. I don't know what the volume is at this point, but it's sure starting to act a little better.
It's looking like it's going to be below average volume today.
Yeah.
But that's definitely been a leading stock, and even with the secondaries, if you look at it on a weekly chart, it's really done everything you could ask it to do. If you bought it coming out of the breakout back in September last year and just sat with it, you're in fine shape.
Now, I had a lady on the show after Jimmy came on Wednesday. She's a client from Seattle, and we still own it from back there in the 42s, and she still has it today. And, I'd have to pry her dead, lifeless fingers from the stock. And at this point, she loves it, It's interesting because I've tried to get her to scale back a little bit here and there, and she's like, no, I think I'll stick with the Michael Kors, Joe.
Well, they've got, I see stores opening up all over the place in the New York area.
Right. Well, Jeffrey, I really appreciate your thing. If you could say anything to my listeners about me, anything that you would give them some advice if they're having a tough time, and maybe. What do you think? And I want to just say to all the listeners, I haven't paid Jeffrey a nickel to say any of this. He offered out of the goodness of his heart to spend his time. He's a very busy man. I told him I was doing the radio show, and he wanted to come on and talk about what we've done together. So he's not being paid for this, and he is taking his time out. And it's really for you, the listeners, okay, so that you can know, if you're new to this, that anything is possible. It's the time you put in after 9 to 5 every day and on weekends. It's a time you put in studying that makes all the difference in the world. But you got to have a system and a set of rules. And Jeffrey's an example of somebody who's really done well with it. And he's just one person. There's many, many of my clients that have changed their lives with this system. And I've seen a lot of people. Ropel is a perfect example. I mean, he's made huge amounts of money using this system. And I'm sure you know some people as well, no?
Well, I know Jim Ropel. You introduced me to him, and he and I have, batted around ideas and gotten to know each other over the last 10 years or so. And the thing about Jim that I've learned from is he is almost robotic with the system, and doesn't try to outthink it, doesn't try to overthink things or outthink the market. And that's really the lessons that I've learned is, be consistent with the rules, and you can really do well. And he's one of those investors that really knows how to hold on to winning positions and big positions and adding to them. And
you know what I like most about Jimmy is he's so exciting when you talk to him. He's so revved up all the time, and he's really passionate about this. He was talking about he was playing golf the other morning, and he had a horrible game because he couldn't take his mind off the market.
Yeah, well, that's Jim. Yeah, everyone has different personality. I'm more of a mellow guy, me.
Sure.
And I think that. Well, I would just going back to your question, I would say the best way to use you, Joe, is, you were a wonderful teacher for me. You were always very generous with your time. you focused on details that I only learned, how important they were after I were in various seminars. And
So
I
I was
think
I was
that,
coaching you from the beginning, you know?
yeah, you were coaching me from the beginning, absolutely, and inspired me to spend those hours learning, which I did. I remember um, sitting there looking through charts over and over, and my friends and family thought I was, kind of kooky, but it really, really made a huge difference.
And we used to
Uh,
talk every Sunday night, no?
yes, we did.
And
We did.
for not just a short period of time, I'm always accessible to my clients. And
Yeah.
usually we were talking first thing on Monday morning as well, no?
Yes, yes, we were. We were.
You
And I
know,
missed those days. But
I
I'm
do
just
too.
like,
I do too.
my legal career is so busy now that I don't have as much time for a lot of things anymore. And now I have children, so Joe, my kids are taking priority over you. I apologize.
Oh, it's quite all right, Jeffrey. You're just a beautiful, beautiful guy. How old are your kids now?
They just turned 8. I got twins.
Wow, amazing. I mean, you
Yeah,
must be really having a lot of fun, huh? Are you teaching them how
I
to read
am.
cup and handles?
Yeah, from the beginning.
I know.
From
I
the beginning.
remember when you told me your son was about 4, and he goes, "That looks like a cup and handle, Dad."
Yeah, trying to teach them what breakouts are. Early on, it was a little bit. It was kind of comical because I would, they were. Let's see, they were about 3 or 4 when the market was really crashing in 2009. So I'd wake up, put it on CNBC, and I'd say, "I'm looking at the market. The market's crashing." And they were worried that when we went to Whole Foods, the building was going to crash because that's the only market that they know, the Whole Foods market.
That's so
So,
awesome.
but they're older now, and they kind of have a sense as to what I'm doing, and I'm going to teach them. If I can teach them half as good as you taught me, I'll be teaching them, giving them an ability to achieve financial independence and not always be reliant on someone else. And
Right. That's what I try to get across to my listeners. If you're just buying stocks off a broker's opinion or anyone else's opinion, you need to learn for yourself what these look like. And then once you learn the basic principles, there's nobody going to be able to pull the wool over your eyes anymore and sell you some type of story. You know what I mean?
that's right. That's right.
So that's
Well,
critical.
Joe, I need to run. It's almost 2 o'clock here in New York, and I've got a client call at 2 o'clock. It was a pleasure chatting with you. I'm happy to come back on your show again in the future if you'll have me, and we could chat
I
a
would
little
love
more.
to do that. Maybe we can open up the lines and have some listeners ask you some questions. Jeff, thanks for your time. Have a wonderful weekend. I love you, man.
You too, Joe. Take care.
All right. All right. That was
Bye-bye.
Jeff Levy. He's a client of mine from the 90s that had enormous success in the market. I mean, he started with 10 grand with me, and over a couple months, he added another 40. But, he started with 50,000, and by 5 years later, it had grown to, I think he said 7,600% total. I think it was 150% compound per year. So his account went from 50,000 to 1,000,008. And at that point, he had it audited and he started his own hedge fund. But Jeff's a good friend of mine now, and we talk often. We'll have him back on the show. But the purpose of me having him on here is for you listening out there. If you're having trouble with your broker, you're not making any progress, give me a call at 866. I'm sorry. God, I hate doing that. My number is 888-668-9562. Again, if you're having problems with your broker or if you want to try to learn something new that could help you, I'm available. I'm doing seminars every Saturday morning. The first one is tomorrow between 9 and noon, but you do have to sign up. Space is limited. You can call me at 888-668-9562. Again, 888-668-9562. You can email me at jgilbert@ncsecurities.com. NC stands for Newport Coast. So it's jgilbert@ncsecurities.com, or log on to my website at howtoinvestinanewamerica.com. And I'll send you my model book if you'd like, but you do need to sign up for the seminar. I need to know who's coming, so I make sure and have enough coffee and snacks for everybody. But we're going to go over what to look for when buying, a lot of the little details that you're not going to learn anywhere else, okay? So if you think you have some time tomorrow morning and you want to have a little fun, come and meet me down in my office in Irvine. My number is 866. Oh, my God. What a knucklehead. I'm sorry, guys. My number is 888-668-9562. Gee, Joe. 888-668-9562. Once more, 888-668-9562. Let's take a break. You're listening to How to Invest in a New America with Joe Gilbert from Newport Coast Securities in Irvine. We'll be right back on 1510 AM KSPA and 1450 AM KFSD. Financial News and Talk.